Today, I'm going to talk about the shifting Ontario real estate market and what it means for real estate agents and their businesses as they look ahead to a much more challenging environment to go about selling real estate in 2023 and likely the years to come. So, what exactly is going on in the Ontario real estate market right now? Well, if you didn't know, prices are coming down and so are sales. The Financial Post here saying 14% down from a year ago, sales down by almost half, 44%. Which according to the Toronto Real Estate Board means prices have come down by about $200,000, where the average selling price year over year down from 1.25 to just over $1,040,000, 16% year over year according to them. This of course is happening because the Bank of Canada is trying to address this unaffordability or this affordability concern across the country. So they've increased the lending rate for mortgages by 8 different times over the course of the last 12 months to make it much more expensive for home buyers to qualify for higher mortgages and also to make their payments. So this is having a real impact on borrowers and consumers' ability to buy. And it's in response to studies like this one by the Royal Bank of Canada, which found that in Toronto, a household needs to spend 85% of its income to service a mortgage. Now that's crazy. That's not sustainable to have 85 cents of the dollar going to just the mortgage, let alone everything else it costs to live. That just is not sustainable and is not going to work, and something does need to be done about that. And so I am relieved to see that action is being taken to make real estate more affordable for people here. And it's stuff like this that we need to see. So Ontario and BC are in tough shape here with that, and the government is taking action with that. And we're seeing the real life stories of this show up in the news here now too, where people are leaving Ontario in record numbers because they want to be able to move and live in an area where they can afford a house to raise their family and put down roots. And so this is also obviously bad news for real estate agents when your consumers or clients are getting out of Dodge because it's too expensive to live in the market that you do business in. So hopefully we start to see this normalize a little bit as interest rates have an effect not only in Ontario but across the country. But this is certainly a headline grabbing story now that we can probably expect to see just a little bit more of for the remainder of the year. Now let's look a little bit closer at statistics that matter more for real estate agents and their business. And in particular, I want to draw your attention to the active listings on here. So this time last year, there were 4,100 listings according to the Toronto Real Estate Board. This time now there's 9,300, so more than double the amount of listings. So you have half the sales or close to it and twice the amount of listings, half the revenue and twice the cost. There's that many more listings that have to have photos taken, marketing, signs put up. All of those costs are borne by real estate agents as a part of the transaction. So realtors are now going to have more money to outlay and fewer sales happening to bring revenue in. Both of those two things are bad news for the bottom line of real estate agents in Ontario this year. You can see here transactions, they're down by half, and days on market. So the amount of time that a property stays on the market, more than double. So it just means that many more trips to the property, that many more open houses, that many more conversations with homeowners about why their property is not selling as fast as it was with multiple offers in the years past. All of that stuff is going to show up for real estate agents in Ontario this year and into the foreseeable future. Now, it's not fun, and I know it's not fun because my brokerage lived through this in 2015, and I'd like to draw your attention here to 2014. If you look, this happened to Calgary in 2015. We had our downturn for different reasons than what Ontario is going through right now, but we had our transactions fall by almost half. And you can see here that stayed low for about a 6-year period as our market tried to readjust to everything. Fewer buyers meant fewer trade-up sellers. All of that stuff happened. And it was 6 years for us until our market went through its cycle and came out the other end, leading into the pandemic here and the boom that happened across the whole country. And so I want to talk a little bit about the condominium market because I do feel that this is going to have a spillover effect that real estate agents in Ontario and consumers need to be mindful of. And a big part of this is the investor interest in condominium product. Fully 1/3 of condos in Toronto are owned by investors, according to Statistics Canada. And this, of course, is because of the pre-construction play in real estate where you could line up to buy a condo, put your name down on the purchase contract, put a deposit in there, and then with the prices increasing like they have been over the years past, you could expect to sell your unit sometimes without even taking possession of it, or you could sell it to another buyer, another investor upon closing, and make a good return on that because you've speculated on prices going up, and that actually came to pass for a number of investors. Well, that's not going to be the case now. And these units are going to come, and investors are not going to be able to make money out of them. They're going to try and list them for sale. They're not going to be able to assign them. The rents aren't going to cover all of their costs, so they're going to go and try and dump these things, which is going to mean more listings and an even tougher real estate market out there. But that's not the worst part about it. The worst part about the condo market, you can see here the days on market. This happened to Calgary, and it's going to happen in the GTA as well. Where in 2014, we saw the amount of time that it took to sell a condo continue to go up, and then the pricing on them come down. Now, this happened not only because of our overall shift, but also because of all of the units that were sold in pre-construction that are then developed and built and then hit the market during this depressed market condition. So in Calgary, back in 2016-17, all of the units that were sold in pre-construction in the boom years of 2014, well, it took them a couple years to get built. And then in 2016, when our market was already terrible, we had all of this additional supply hit the market, which made it even worse. And you can see here, prices just started to come down from there for the years after that. And I think this could happen in Toronto, given all of the interest that we've seen in the apartment style condominium market and the speculative nature of that asset class in the GTA. That is going to be something for real estate agents to watch if you're an agent doing business in Ontario. So the bad news for realtors here, transactions are coming down, which means fewer paychecks available for real estate agents. The commission pie of the whole province is just going to shrink up a little bit, and it's going to be harder and harder to get revenue out of this industry. You're also going to see more costs, right? So listings are going up, days on market are going to increase, which is going to mean more and more marketing expenses, more costs to go and achieve that revenue to get a chance at a reduced sales volume that you're going to see within the Ontario real estate market. It's going to be harder. Falling prices mean houses aren't going to sell themselves anymore. You're not going to just be able to put a sign out front at a reasonable price and expect to have half a dozen offers on it right away. Falling prices mean it's going to be harder to go and get buyers to come in. Realtors are going to have to work for it. You're going to have to know who to target your listings towards. You're going to have to price it exactly right, and you're really going to have to work hard to go and pull buyers out of the market for your clients' listings, because it's going to be a tougher market, and buyers aren't going to be as keen to chase equity gains and overlook certain things that they might have before. Property inspections are going to be back in. All of that stuff is coming your way, Ontario real estate agents. And you can also expect a little bit of compression due to increased competition amongst agents that just aren't seeing the deal volume. They'll be willing to do it for a little bit less just to keep something in the mill for some of these agents that don't produce a lot. And that is a factor that the good agents in Ontario are going to have to deal with, because fully 85% of agents in the Toronto Real Estate Board do less than a deal every 2 months, so less than 5 transactions a year, which means 15% of the agents are actually out there earning a living out of this business, doing half a dozen or more deals a year. So there's going to be a lot of agents at the bottom end of the market that aren't going to make it. They're going to have a hard time doing deals when the deals are much, much harder to do. And that means some of the good news for this market condition, because if you're the type of real estate agent to watch a YouTube video about your market and all the bad news, you care about your craft and your business, and you care about your livelihood and being able to be a good real estate agent, and that work ethic will shine through. We had a number of agents in our brokerage that had banner years because they got looks where they didn't get looks before. Because when everyone is making money, they aren't as likely to change. When everyone is making money and sales are just flying and happening all over the place, consumers will use their family friend and not even give it a second thought. They won't interview other agents to find out about marketing plans and all of that. they're eager to go about their deal and buy their next house. Well, when markets tighten up, it means that you have to work harder, and it allows good, hardworking agents to get more limelight and rise to the very top of it. So if you're a hardworking agent, you will be fine. You will be more than fine, actually. You'll be able to come out of this market condition and have more market share than you had in the past, because you're smart and you're hardworking, and consumers are going to be looking for that. So you'll be able to move up into these higher tiers here of transactions because of your work ethic and what you're doing. So don't be afraid. If you're a hardworking real estate agent, you're going to make it. You're going to do okay, but you are going to be facing some headwinds out there. Shifts happen all the time within markets all across North America. This is nothing new. You good Toronto agents, you guys can handle it as well. If you've liked the video here today, please give me a like and perhaps subscribe to my channel. Thanks very much, and I'll see you guys next video.